Every time the stock market starts looking expensive, you'll hear the same thing. The crash is coming. Maybe they're right, maybe they're wrong, but here's the interesting part. Sometimes I actually hope they're right. Now, as usual, a disclaimer just to start out the video, I'm not a financial advisor, so this is not financial advice. This is purely for educational purposes only. So people always fear crashes. There's always these scary news headlines saying that, the stock market's going to crash and how scared you should be. When people's portfolios are dropping, you start to see people panic selling. And especially those social media doom posts that say, if you don't sell your stocks right now, you're going to lose all the money you have and have to start completely from scratch. So naturally, people associate falling prices in the stock market with bad news. At my age, being in my mid to late 20s, being a long-term investor, I don't see it as bad news. So flip the perspective. If you walked into a store and your favorite product was 30% off, would you complain? And that's kind of what it's like when you're looking at stocks in a market that is falling or a crash market. And this is how I look at investing. Of course, this is not for individual stocks, it's for the overall market. So when you look at the market as a whole, you've got, say, for example, Black Monday in 1987, you've got the dot-com bubble in 2000 to 2002, I believe. You've got the global financial crisis from '07 to '09. You've got the pandemic that happened recently in 2020, and then also the inflation bear market, which happened in 2022. All of these situations, there was either a significant dip or a crash in the market, and in all of these situations, the market recovered. Now, this doesn't mean that the market is always guaranteed to bounce back, because it's not necessarily guaranteed. We look at this as, kind of based off of history, we believe that it's going to. But for me, the way that I look at it is if the market ever completely crashed, I would probably have bigger things to worry about, because something wild would have had to happen in the world, and, my money in the market probably wouldn't be my number one concern in my life if I had to guess. So this is where dollar cost averaging comes in. When prices fall, the same monthly, bi-weekly, weekly, daily, however you have it set up, contribution buys more shares. So more shares when the market is down means more wealth later if the investment recovers. So for example, in a previous video, it was actually my first video on this channel, I talked about investing or dollar cost averaging $100 a month from the age of 18. And in that video, I touched on, the market is going to dip. There's going to be, decreases in the market. There's going to be increases in the market, times where it's going to be stagnant, and you have to learn how to ride that wave. So with that $100 a month, when the market is dipped or the market experiences a crash, if the market recovers, which again, never is a guarantee, but based off history, we believe that it's going to in a situation like this, your $100 a month when the market is down is worth more than your $100 a month when the market is up. So let's say you walk into a store and there's a product that is a normal price and you take $100 and you buy as many as you can with that. If you go in the next day and that product is on sale, say for example 30% off, you're obviously going to be able to buy more of that product because of the sale. Now, when the sale is done, that product is going to be worth what it originally was. And that's the same thing if a market recovers. Now, that example might not be the most perfect example because you're likely not going into a store and buying appreciating or likely to appreciate assets, but you get the point. So as I've been saying, when a market dips, there isn't necessarily a quote-unquote guarantee of recovery, even though history shows it has. So it's important to note that, first, recoveries can take years. If you're investing into a dip or a crash and you're expecting to get your money back in the short term, that's not something you should necessarily expect. As we talked about with a couple of those examples that I listed before, it took several years for the market to recover, so this isn't a quick thing. Second, again, nothing is guaranteed, despite the fact that history shows us the overall market recovers. And that's why it's important to always, number 3, diversify. So diversification matters so that you have your money not all in one thing, so that if, God forbid, something extremely bad happens, you're okay. So I'm comfortable as a young person being a long-term investor because I have plenty of time. So I always look at it as the 2 ways to make more money is A, obviously make more money, or B, the second variable, have more time, because more time in the market equals more money. So those are the 2 main variables. If you're, say for example, retiring next year, your perspective is going to be very different from someone like me who is in their 20s. And it's also important to note that the market going down doesn't automatically make you poorer as well. A lot of people will, say for example, panic sell and they'll lose money. If you sell at the wrong time, that's what makes you poorer. So I'm not trying to time the market. I'm dollar cost averaging and not sweating when the market is down because I have so much time in the market left. And I think I've mentioned this in every single video that I've posted so far, but this is why I want to try to find people with these videos who are young. If you're not, it's never too late, in my opinion, to start investing. But if you're watching this video and you are young, whether you're in your 20s, 30s, etc., and you have all of this time to build your wealth, then I hope that you're able to take something from my videos and start working towards building wealth for yourself. Now that's all for the video today, guys. If you have any questions, feel free to leave them in the comments section down below and I'll be happy to answer them. Hopefully you guys enjoyed the video. If you did, don't forget to subscribe and like the video, and I will see you guys in the next one.